Welcome to Tech Tuesday. My name is Veronica Farmer. I have the honor and the privilege of being the VP of Marketing for Wesley Clover. Thank you for joining us and thank you for taking a seat. We have a special format tonight. It looks a little bit different. I know I have been changing it up on you. Tonight is a fireside chat without the fire, and it addresses tech markets on the mend, a view from Bay Street. The discussion is anchored on a recently released report by CIBC Capital Markets titled Canada's Emerging Tech in 2023. And in its 11th year, the report gives us some hope for tech markets. I'm pleased to introduce, on my left, my colleague Ben Morris, VP of Technology Strategies for Wesley Clover. Ben is hyper-focused on tech. He knows tech, he uses tech, he's involved in tech, and he's passionate about the investment in tech. He also supports our portfolio companies from business development to sales to strategic guidance, from startups to publicly traded companies, and he's actually a super nice guy. Alongside Ben is our special guest tonight, both a friend and an ally, Todd Copeland, Managing Director, Technology and Innovation from the Equity Research Division of CIBC's Capital Markets. Many of you in the room will know Todd, and he's been very involved working closely helping finance many of our local tech successes over many years. Tomorrow kicks off a Wesley Clover and CIBC jointly hosted Ottawa Tech Tour that Todd has been leading for many years alongside Terry Matthews. Todd's investor delegation this year holds well over $1 trillion and is focused on public and late stage investment. We're delighted to have you here, Todd, and the CIBC crew and the investor delegation that is starting tomorrow, who will be talking to many of our local tech companies. So without further ado, Ben, I hand it over to you. Yeah, come on up.
All right, let's see if these mics work. Check 1, 2. All right.
Can you hear me okay?
I certainly can. I don't know if anybody else can hear you.
Hello, everyone. Can you hear us in the back? All right.
So Todd, should we just take a moment to go off script for a moment?
Let's go off script, yeah.
What do you know anything about today? Any sort of special day?
I heard that it's a special day.
It's a milestone day.
In Canada,
It is?
in Ottawa,
Yes,
in Canada,
perhaps.
in Wales.
Certainly in Wales. So we're not going to embarrass Terry because he's not easy to embarrass, but it is a milestone birthday for Terry. So I thought with this size of audience, it might be fun to give Terry a warm, happy birthday. We won't sing, but maybe a clap or a,
Just a...
Happy birthday, Terry.
Now, if I was in Wales, the crowd would stand up and say, "Why was he born so beautiful? Why was he born at all? He's no bloody use to anyone. He's no bloody use at all."
All right, we won't tell anybody you're turning 22, but keep that a secret. So thank you for coming and joining us. Just looking across the room, there's a very broad mix, Todd, of people from the tech community, investors, academia, senior government officials. Pleasantly surprised tonight that we have a few former politicians or wannabe politicians in the room. We have a by-election or an election. Thank you, Ms. McCrimmon. Anybody else running for this riding, feel free to stand up and wave.
This week, Mintel is 50 years old.
This week, Mintel is 50 years old. And so there is certainly a very diverse mix of people in the room, and we come together as a community. And somebody that's supported this community for many, many years is our good friend Todd Copeland. Todd is visiting us from Bay Street, where he has brought, as Veronica said, a delegation of tech investors up to Canada to meet with us over dinner tomorrow night, and again, some presentations of Ottawa and Canada's finest rising tech companies, where they'll have an opportunity to pitch in front of institutional and family office and other retail investors, which is a fantastic opportunity, Todd, and thank you again on behalf of the community for bringing that group to Canada.
It's terrific to be here. There's so many great opportunities in Ottawa and Canada and the Canadian tech ecosystem. And it's a vibrant ecosystem, stumbled a little bit the last couple of years, but I think it's on the mend. And look forward to talking to you, Ben.
Great. So I'm going to try and ask some questions that other people in the audience would ask, and certainly we'll open up the floor at the end, and we can pepper Todd with all of the questions that we can think of. So Todd, I know we will start by saying that you don't give stock tips.
I'm not giving stock tips tonight. No.
Okay,
Yeah.
because I know those questions will come up. But anyway, so Todd has been covering various Ottawa-based tech companies for many, many years, Mitel, Newbridge,
Yep.
and a variety of others, Kinaxis, QNX,
Yep.
Shopify. Tell us about the state of tech. What is your view on the world of tech today? You know, as a retail investor, many of us around the table can say, well, it's somewhat depressing to log into your portfolio today, you know, these days if you're tech heavy. What is the sentiment on Bay Street?
I think the tech market has started to recover. It peaked in the fall of 21. It probably bottomed in October of 22. I don't know if you remember this, but third week in October, the NASDAQ on one day when there was a low inflation print was up 8% in one day. And with interest rates starting to at least plateau and inflation seems to be getting under control, when we see that in the market and the public investors see that in the market, they view it as a green light to go back to some of the higher quality names in the tech space. And while we haven't seen a broad rally across the entire tech market since October of last year, we have started to see the higher quality companies do better. And in Canada, that includes Shopify, who is up 80% this year. It was down a lot the last couple of years, but up 80% this year. And they're definitely on the mend, and we're starting to see that interest broaden out. And I would expect that to continue.
And so if we just stay on the theme of Shopify for a minute, because they do help drive, you know, significant capital injections into this community with some of the early employees, what can you say, or what can you speak to about this massive layoff that was, you know, promoted a couple of weeks ago, and all of a sudden, you know, it has a tremendously positive effect on the stock price?
Yeah. I mean, Shopify laid off 20% of core Shopify. So they had about 11,000 employees. So they laid off 20%. And that is, I mean, that was a tough decision. And I think Toby publicly wrote about what a difficult decision that was. That being said, what's happened in the public markets is it's shifted from growth at all costs to reasonable growth where you're not burning the furniture and the house to get that growth. And there was a concern with Shopify in the markets that, particularly because they were building up a logistics platform, that they were staring Amazon directly in the face. They were effectively building warehouses, and they had a significant CapEx spend in front of them. And so the investment community looked at that as competition against a very strong threat. Competition kills stock prices, it just does. And then the cash burn that was expected. So Shopify, they did go through that unfortunate layoff of 20%, said we're going to be a little bit more judicious about where we're putting our resources, and we're going to focus on the platform and push logistics off to Flexport. And they closed that deal today, in fact. And they went from roughly 20% growth and burning cash to roughly 20% growth and positive cash flow. And the stock jumped about 30% on the back of that, and it's continued to rise as investors look at its core prospects as the leading e-commerce enablement platform in the world. They got a lot stronger during the pandemic, and they made this adjustment to their business model, and public investors have embraced that. Now, the tech community is going to have to go through the difficult issue of hopefully absorbing what are likely very high quality staff from Shopify, and I expect that they will, and probably some of the founders and executives in this room were facing a lot of competition from Shopify over the last few years in terms of competing for staff, and that tension probably is a little less in the market as a result of this decision. But Shopify is viewed to be a very healthy company, and these couple of adjustments with logistics and then the staff reduction was embraced in this part of the public market cycle.
Perhaps one more quick question about Shopify, because you and I have had some really interesting discussion behind the scenes. As I look around the room, I know there's a lot of retail investors in the room. Talk a little bit about the mechanics behind the scenes of why Shopify's stock has gone up so significantly as a function of some of the holdings and sort of institutional behavior that exists.
Yeah. Yeah, I mean, this is a little bit inside baseball, so I apologize if it's too technical. Shopify traded after those changes like the stock was heavily shorted, and it wasn't. But basically what happened was portfolio managers were underweight growth and underweight technology. So when they saw the company who was expected to grow 20-25%, go from negative cash flow to positive cash flow, that was accepted in this environment, saying, okay, I'm comfortable with that business model in the medium term. I think they will be able to continue to take market share. And as a result, those professional investors increased their weighting in Shopify. And that's what caused the stock to go up. And it wasn't just a couple of investors. It was many investors who were underweight growth because they were worried about the economy. They were worried about rising interest rates and inflation. And what I was talking about before, where we had the signal that maybe interest rates are starting to peak, inflation's starting to peak, and then you're seeing this more judicious way of managing the business that brought those investors to the stock, and they bought it, even though the stock had risen 60% so far this year. The prospects look better in 24 and 25 as a result of these changes, and that caused them to buy the stock.
Interesting. So I think one of the reasons, again, this community and the tech community in Canada really does look to the to the public markets for valuation metrics and sort of other growth indicators, or sorry, fundraising indicators, is that a lot of the public market has an effect on the private market. You've got frothy or buoyant public markets, and you've got frothy and buoyant valuations in the private sector. One of the unique things about your role at CIBC, given your tenureship and the friends that you've got around the industry, is that you are covering both private sector businesses with a view to helping them go public, and the public companies. Can you talk a little, as I look around the room, I know there's a lot of, not a lot, there's a few companies that are looking to go public in the next little while. Talk a little bit about what sort of headspace should a private company's CEO be in at the moment?
Yeah. Well, for 2023, the IPO market's probably closed, unfortunately. 2021 IPO class in Canada was 15 or 20 companies, more or less down 70 or 80%. So they went public at about 10 times revenue. They're trading at about 1 times revenue now. And so public investors look at that experience and they say, okay, it's not a good competitive position. The business plan pivot to reasonable growth with some cash flow hasn't happened. So I'm not willing to back those companies. And if you're a private company, a late stage private company, and you're looking at the public markets as a potential, you probably shouldn't have a short-term window on that opportunity. High quality companies, might be able to start to go public in 2024, but in 2023, I think that that's unlikely. Investors are focused on the established companies, and I think we'll see that broaden out as we go through the year and into next year. If you're a private company and you're thinking about the public markets, I guess, as a barometer, think of it this way. The NASDAQ was down 30%, the Bessemer Index was down 60, 70%. So the public markets have gone through their correction, right? That hasn't happened in the private markets yet. You see Stripe do a financing, who's a partner with Shopify. That last financing was down only 30%, okay? There probably needs to be more realistic views on valuation in the private markets, and I would expect that companies will likely have to stay private a little bit longer in this context, and except for the very exceptional companies, you are going to see downticks happen in valuations. And Stripe's experience of being down only 30% is not going to be the median, right? You're going to need to see more of the private market start to see those marks come down. And once you see that bid-ask spread take place, I do think the public markets are then going to look to the private market for the right opportunities, and we'll start to see that IPO window open back up. But I don't see that happening this year.
Okay, good to know. So if you're an entrepreneur or a CEO, hold on to your cash.
Hold on to your cash.
You cover e-commerce businesses, you cover autonomous vehicle and cybersecurity businesses, you cover logistics businesses. Maybe share a little bit of your view on emerging tech and sort of some of the areas that you're most excited about from a returns perspective, from an innovation perspective. What are you guiding your capital markets team to be prepared for or start looking at?
We just hosted an investor conference in Toronto last week, and interestingly enough, the attendance for this conference surpassed 2019 in-person conference. So we were certainly happy to see that. AI was on the lips of everybody at the conference. And so what public investors are trying to figure out is what is sustainable in AI, what is going to be a real competitive advantage. And we had Microsoft Canada's president, Chris Berry, give a talk, and he spoke about data and brand. And the modeling itself wasn't sure that that was ultimately going to be a real competitive advantage. So if you have a business and you can leverage your data and that can be monetized and that's sustainable, the public markets are absolutely interested in that. Within the Ottawa context and in terms of the sectors and companies you have here, Shopify is viewed to have gotten stronger during the pandemic, and e-commerce enablement is going to continue for a number of years. When you think about our own retail spending, it's maybe 15 or 20% on e-commerce. That's probably got a long way to go. And so I see a great opportunity for them and companies around them. You asked about autonomous driving. We'll see when we see full self-driving vehicles. I think there is an opportunity there, and I know that BlackBerry and QNX have a significant operation here in Canada. It's interesting. Investors looking at BlackBerry right now, because BlackBerry has announced a portfolio review, they are highly interested in where the QNX and the IoT part of BlackBerry can go over the next few years. And so I think they have a great position in the market, and it'll be very interesting to see how they execute. Those are certainly two sectors that we're watching for. And this overlay of AI, it came on so quickly this year. It had been percolating in the background. We've been having the Vector Institute and AI specialists come to our conferences for the last few years. And every time we would listen to a presentation, the public investor would say, well, how are you going to monetize that, right? How is that going to be turned into a commercial business? And for the first time, we saw that basically flip a switch this year. And, we'll see. We'll see some will work and some won't. there's absolutely full attention on that part of the market right now.
I think everybody from academic institutions to politicians running for the next election are trying to figure out how to leverage AI. It's just to remind people how quickly stuff moves. ChatGPT really went public in November. And it's already the 16th most popular website on the planet. And that's just from people doing queries about, build my resume, how do I write a thank you note, what's a fun, happy birthday, write me a marketing, message. I think the game is about to change significantly for business automation and a variety of other things as a result of this tech.
It's going to be a fantastic productivity tool, and businesses will embrace it. There was a book called AI Superpowers, a friend suggested I read a few years ago, and there's a chapter in there on stock market analysts and how they're going to be replaced. And I'm like, well, okay, if I'm still around doing the job. But I absolutely look at this development as a productivity tool, and it will help me do a much better job. We've started to see it a little bit with alternative data sets in the stock market, and putting it to use with these kinds of models will be fantastic. I think it'll be embraced. It'll be a terrific productivity tool.
Just to switch gears a little bit, and again, I apologize, we're all over the place, but lots and lots of questions. Given your background and sort of the community here, one of the unique insights that you bring to this discussion is the fact that you are heavily involved in younger, earlier stage businesses. You interact with CEOs of large publicly traded companies on a regular basis and the management teams. Give us a little bit of an insight in terms of what you would be doing to maximize the likelihood of a successful outcome for an earlier stage company. What are the things from your perspective as you've interacted with these senior leaders over the years, what are the things that really set them apart? What should a younger entrepreneur think about when they're building their business?
I mean, this is the man here who has the rules for that. I've heard Terry talk about his rules and putting your business on a single piece of paper and hiring a credible auditor, being able to talk about your sales weekly or monthly, maybe even daily in this environment. Listen to what customers are saying. Those are absolutely fantastic rules, and you should leverage the mentorship from the community here for your own company. Beyond that, and those are that when Terry initially told me those rules back a few years ago, I absolutely put that filter on when I'm listening to companies and management teams of all sizes. Right, those are excellent forms of discipline. What public investors look for are under-promising and over-delivering. It's hard to do, and it doesn't happen very often. And you've seen Apple do it for years. It's a big company. It's hard to compare probably a startup to an Apple, but it's how they carry themselves in the public market, but under promising and over delivering is something that we look for, and build a trust with the investors that you meet. Right, it's not just a cash register. It's not just a place to get money. If you help the investor make money, they will be there with you for the life cycle of your business. And every business isn't going to be perfect, and investors don't expect that. But having that trust through your life cycle will take you a long way and allow you as a management team to focus on other things.
And so if we lean into that a little bit more, maybe walk the audience through taking a business public. When does that prep work start? All of the groundwork that you've got to put in to get ready and find the right window, and then all of the working, all the goings on after you go public. You can work. I mean, that's what you do a lot of.
Yeah.
Help provide some of that insight to this audience. It's very interesting.
Yeah, so Colin Ryan is co-head of technology investment banking at CIBC. He'll be here tomorrow if you're interested in the specific mechanics of getting ready to go public. You know, I'm in equity research. That's not exactly what I do, but Colin would love to meet you and talk to you about that, and we can certainly make that introduction. From my standpoint, and you know, you talked about my crossover activities where we're tracking private companies well before they go public. When you get a phone call, whether it's from CIBC or another bank, take it. Start to get to know those firms. Start to get to know the investors, because those will be relationships that you will come to rely on once you go public. If you think about the public investor community in the Canadian context, there's probably 50 managers that matter from a tech and growth perspective. And within that, when you go public, if you're a $500 million to $1 billion valuation, you're going to have 5 to 10 core investors, right? So those are people that you're going to know and build a relationship with. So you can start to do that well before you go public. And that's one of the reasons we're coming here this week, Ben. Half the agenda is public companies, but the other half of the agenda is private companies. And these are public investors and public crossover investors that will invest in later stage private companies. They're getting to know those management teams, their ability to execute, the ability to underpromise and overdeliver and figure that out well before they go public. So when they meet the company, they can make that decision to be a partner with those businesses.
I think one of the things to share with the audience that you and I have talked about quite frequently is the quality of talent and entrepreneurship and businesses that this Ottawa community helps to foster and grow. You contrast Ottawa with I'm going to pick on Toronto, but you contrast it with Toronto, for example. The average age of an entrepreneur starting a business in Toronto is much younger than Ottawa, for example, from a tech perspective. Does that correlate to quality? Does that correlate to growth and stability? I don't know, but certainly the feedback that we've had, and I think this is your third or fourth tour up to Ottawa over the years, the feedback that always seems to come back from Bay Street is, wow, I didn't realize Ottawa had so much going on. And two, I was blown away with the quality of the businesses in the Ottawa area.
I mean, Ottawa has the #1 tech concentration of staff in North America. So there's a CBRE ranking that comes out every year. They rank the top 50 tech markets. I think Ottawa ranks overall 13th, and Canada has a long list of participants in that list. But Canada is known for the quality of its talent and the cost. It's half the cost to do business here in Canada relative to a California, a Silicon Valley, or New York, or Seattle, where you have those big markets. I mean, that's a significant difference. And the other thing that Ottawa and Canada and other Canadian markets have going for them, they are attractive places to live, right? And so tech talent is migrating to these centers, whether it's Toronto or Ottawa, Canada, because they're attractive places to live. And I've had a number of VCs this tech cycle say, they view the quality in Canada to be, as good as any place in the world. And as a result, the VC community has matured. And they've matured to the point where they can go from a startup of 1 or 2 people, angel rounds, their ABC rounds, their late stage rounds, and go public. And the financial community is willing to support the ecosystem in Canada from the very beginning all the way through to the public markets to maturity. And so that says a lot about the quality of the businesses, the quality. I had a leading VC tell me this at our tech conference last week. He said, Canadians used to have a problem with go-to-market. So they'd have a great product, a great idea, but they couldn't find the customers. And that's changed in the last 10 to 20 years, where the go-to-market teams that are in Canadian startups and the Canadian tech community are just as good as anywhere else. And so that's well understood by domestic VCs, and this VC happened to be based in Washington, D.C. and invested globally. But he said that's not even a conversation anymore. It's more, okay, you know, is that a business I want to be involved with, and do I want to put semi-permanent capital there and be there with that management team through their life cycle?
So I recognize that where we're sitting is really the heart of telecom as well.
Yeah.
And, you know, it's a very cyclical sort of view that the investors take of telecom. We've frequently talked about 5G and what effect that will have on, you know, industry and growth and other things. Talk a little bit about, you know, that next generation of telecommunication or wireless. You know, again, as I look around the room, there are a lot of wireless people here. 5G is a big deal in this town.
Yeah.
You won't hurt our feelings if you tell us things that we don't want to hear, but it is good for this audience to hear, you know, how Bay Street views some of these, you know, fundamental connectivity technologies, and where people may want to think about, you know, putting time and effort to maximize their, you know, their return.
Yeah. Yeah, it's a good question, Ben. Like the investment community has been struggling with what to do with the 5G investment cycle, right? They've seen 3G, they've seen 4G, and they're not exactly sure what to do with the 5G cycle. And you're right, there is a bit of a skeptical mind when it comes to the infrastructure. And, you know, Huawei was very aggressive in the last cycle in getting a global footprint. That's obviously been pushed back with geopolitical tensions for this cycle. But it still left the view of public investors anyway, the view that this is a very competitive market, not sure where they're going to make money in the market, right? And so that's what I would say that, this is a very general view, but if I were to make an overarching statement, you look at IoT, like where are those opportunities that are unique, that can scale, that have a competitive advantage where it's not, you know, 20 competitors, it's like one or two, you know. Peter Thiel, you know, often says, you know, I want to find a business where the TAM is undefined and there's no competition. And there's a lot of truth to that statement. And so I'm not saying 5G is all the way to the other end of that spectrum, but there's certainly some parts of it that the investment community thinks are. So then within IoT and edge computing and other parts of this 5G cycle, where are there clear competitive advantages where these businesses can scale up and make money, right? And for me personally, I'm not sure exactly where that is, right? And I know there are some global, international, telecom, networking, optical infrastructure companies in this community. It's a very important part of the community. These are fantastic businesses. But even within that context, if you're like a startup, like where are you going to fit and stand out, and can you scale up, and can you have that competitive advantage over a period of time? Not just for like a quick, you know, handful of sales to a few carriers, but is that business repeatable? You know, maybe take a page out of the SaaS business, which has been recurring and garnered very high valuations, right? So I'm not saying every business has to be a SaaS, 80% gross margin, 30% operating margin software business. But the experience in the public markets has been uneven. And so that needs to change in order for this mindset to adjust.
Absolutely. So, you know, a couple fun facts, because this happens to be a subject area very close to my heart. When 4G launched 11 years ago in May, there was no Netflix streaming, there was no YouTube video, there was no Spotify, there was no TikTok. There were like the 6 most popular apps that drive all network traffic didn't exist 11 years ago. And they really have defined this era of, you know, connected device.
Yeah.
And so, I personally expect, the second part of this 5G wave to really bring on a lot of these high-value apps, these inventions that we've never even thought about. Yesterday was a great announcement by Apple. We will all be shocked at how many people want to spend $3,500, US for a headset. But that will start the next wave of something. And surely these things will be 5G connected at some point in time, and someone will figure out how to monetize it. So anyway, we'll see. So maybe the jury's still out, but to be determined on how people really, truly monetize 5G.
Yeah. And, it's just, something to keep in the back of your mind. You don't necessarily you're not on that monetization path, like from the second you start your business, but it needs to be like someplace fairly close, right? In terms of like, how is this going to turn into a business, right? How am I going to be able to attract global customers and scale up, and make money? And that, we track the 5G trend fairly closely at our firm, and it's something we're absolutely on the lookout for. So if anyone's in the audience here and you have something that sounds and feels and looks like what I'm talking about, I'd love to meet you and hear about your business plan.
Well, and so maybe that's a good segue and a good opportunity to open up the floor